In 1974, Beefeater opened its doors, bringing affordable steak and classic pub dining to a British public that didn't have many options for eating out. Over the next 5 decades, these restaurants evolved into essential local fixtures. They became the default venues for family birthdays, Sunday roasts, and affordable meals for shift workers in suburban and rural areas where dining options were scarce. Now, that 50-year run is coming to an abrupt end. Whitbread, the corporate parent company, is permanently exiting the branded restaurant market. The shutdown schedule is exact. September 3rd, Table and Whitbread Inns close. September 7th, Brewers Fayre. September 10th, Beefeater ceases trading entirely. Hundreds of established venues vanishing from the high street in a brutal 7-day window. The immediate consequence of this rapid timeline is that 3,800 hospitality workers are suddenly facing redundancy. A legacy of community dining has been replaced by a ticking clock. Whitbread is executing a rapid transition toward absolute corporate efficiency. The workforce facing this shutdown includes kitchen teams, waiting staff, and managers who have dedicated years and sometimes decades of service to these specific brands. The Unite Union stepped in immediately, publicly demanding full consultations and alleging employees discovered the job cuts through the media. They learned this rather than through internal company channels. Whitbread countered by pointing out they recruit around 15,000 people every year across their wider business. The company pledged to retain and redeploy affected staff into those open roles. Still, Whitbread is a highly successful hospitality giant, operating Premier Inn, the UK's top hotel brand. Amputating its famous dining properties is an extreme measure. To understand why they pulled the plug, we have to look at the math. A standard restaurant profit margin is currently being crushed by simultaneous increases in business rates, national insurance contributions, and severe food inflation. These economic factors are devastating for businesses with high physical overhead, like the large standalone properties utilized by Beefeater and Brewers Fayre. Contrast that with Whitbread's Premier Inn division. Hotels operate on a different equation, requiring lower relative overhead while generating significantly higher profit margins. This disparity led Whitbread to pursue a pure-play business model. In corporate terms, that means stripping away all ancillary, lower-performing businesses, focusing the entire company's resources exclusively on its most profitable core asset, hotels. The cultural value of a local pub doesn't register on a modern balance sheet. To Whitbread, these legacy restaurants had become intolerable financial liabilities. That realization didn't happen in a vacuum. In late 2023, the New York-based activist hedge fund Corvex acquired a 6% stake in Whitbread, making them the company's second-largest single shareholder. Corvex applied immediate pressure. Their central argument was that Whitbread's stock price severely undervalued the inherent assets sitting on the company's books, specifically its massive portfolio of UK real estate. To appease these investors, Whitbread leadership adopted a £250 million efficiency master plan. This flowchart breaks down exactly how a single struggling restaurant property is converted into 3 new revenue streams. The first major step is recycling assets. Whitbread is selling off and leasing back £1.5 billion worth of its freehold properties, injecting massive amounts of cash to fund future growth. The second step is physical conversion. They are taking the square footage of the former restaurants and building 3,600 new, highly profitable Premier Inn extension rooms in locations with high demand. External hedge fund pressure accelerated the demise of these Main Street dining venues. A traditional British company prioritized aggressive shareholder value over maintaining its legacy operations. Going forward, the physical reality for Premier Inn guests will look very different. The standalone branded restaurants are being replaced by smaller integrated food and beverage units built inside the hotels and designed exclusively for hotel patrons. This shift carries a tangible societal impact. Everyday towns are losing accessible third space community hubs where residents used to gather, celebrate, and socialize. We are looking at a stark dichotomy. A massive £250 million financial victory for corporate investors comes at the direct cost of local venues and thousands of jobs in the surrounding communities. And there is no turning back. Once the September 10th deadline passes, the Beefeater brand, as the public knows it, is effectively extinct. The survival of the modern, publicly traded corporation increasingly requires severing historical ties with the exact local communities that originally built it. To find out exactly when the venue in your town is shutting its doors before it's too late, head to the URL on your screen to check the specific closure dates. Make sure to follow us for live updates on the union negotiations and our ongoing coverage of the rapidly evolving British High Street. The dates are now locked. The rapid-fire countdown to the end of a British institution is officially underway.